So investment bankers love to talk about how many hours they're working, unfortunately, all the time. So are you working less or more since you started your own firm?
I mean, the obvious answer is yeah, is more. I stopped tracking how many hours I work.
Hello and welcome to the Power Players. I am your host, Harun Bukhari. My guest today is Matthew Edgar, who's a 28-year-old ex-Goldman Sachs banker who recently launched his own investment bank called Edgar Matthews Co. So let's jump right into it. Matthew Edgar, thank you so much for joining us. You and I have both known each other for a long time. You're one of my oldest friends in the city, and I'm super proud of all you've done over the last few years. But my first question to you is, how does a 28-year-old start an investment bank?
Well, first and foremost, appreciate that warm welcome and glad we could find some time to do this. It's a natural question. Maybe just taking a step back, I mean, the story of the formation of Edgar Matthews probably started, 2 to 3 years ago when the idea started percolating. I've been working in banking, call it, 7 to 8 years at that point. And, quickly realized that, most of my career was spent in FIG coverage groups at various investment banks. And realized very quickly that I was trafficking in what I'll describe as more off the run type of situations and deal structures and client types, and realized that there's a big potential to work with smaller clients, but still offering sort of the sophistication and execution quality of a big bank. And oftentimes, working at a big bank, you have less flexibility of working with smaller businesses, and realize that if a big bank wasn't going to work on a particular situation, the next best option was pretty poor quality. So our goal very quickly became being able to really mimic that quality of service, but offering it to a smaller and wider client set. And it's funny when people ask me how I actually started the investment bank, which I can go on and on about this. A pretty large group of folks that do ask me this, kind of approach it with a puzzled face, because with starting an investment bank, there's by definition so much regulatory sort of tape you need to get through and compliance requirements and legal considerations. But we were able to do it in such a way, which I think, we're going to get to later, but was able to outsource a lot of that middle and back office functionality and really just focus on covering clients and working on types of situations that I've been doing for almost a decade now.
So starting an investment bank is not as simple as starting your usual startup. Not many investment bankers are thinking about starting their own banks. I know you said the idea kind of came to you 2 to 3 years ago. Walk me through when the idea first came to you you thinking this is something that can actually happen, to you finally having the guts to pull it off?
Yeah, I mean, I think I kind of gave you a good sense in my, previous response around how the idea or the thesis came about. But in terms of going from idea to actually putting it up just a couple of weeks ago, I think it was the product of a couple of things. One, when I was at Goldman, I worked there for, just over 5 years. I was extremely fortunate when I worked there to have a seat that enabled me to really drive commercial impact earlier in my career relative to a lot of my peers. And it wasn't because I was special, but I had a great mentor that put me in the right situations at the right time and really accelerated my sort of growth in the business. So being on the younger side and building tangible relationships with clients, with investors, with law firms and other constituents in the market, I think is part one, right? You can't start an investment bank if you don't have conviction in your relationships, and those relationships are reliable and are vast. So being able to develop those earlier was a huge part of it. The other big part of it is just determining how is this firm actually going to be differentiated relative to what's sort of being offered out there today. Starting an investment bank, an independent investment bank, is not a novel idea. I mean, there's hundreds of investment banks scattered across the U.S., And what I realized quickly is most of those are monoline, either focused on typically M&A advisory or a sector, which there are certainly benefits of that model. But I thought if there was a way to package sort of the full service capabilities of a big bank and bring those down market, that would be super differentiated and resonate well in the market. So in designing the firm, a lot of my experiences on the financing side, covering FIG, you sort of need to traffic in, equity, debt, securitization, structured credit, the really across the capital structure type of financings, and realized if I could bring those types of services specifically to small and mid cap situations, then it would be quite differentiated. So I was writing the business plan for probably longer than I'd like to admit, and finally pulled the trigger. I'd say, one, right now it's a tough environment to work at a big bank, quite frankly. I think this dislocation we're seeing in the market creates a lot of opportunity, particularly in the middle market. I think that's one. And, I think also from a partnership perspective, I had gotten to know GT Securities sort of a couple months prior to setting up shop, and realizing that I could outsource a significant portion of the platform. Also, provided support and comfort that I would have the bandwidth, especially at the beginning, to stand this up. And look, after that, I don't want to say the rest is history, but the hardest part is just leaving. Obviously, places like, Goldman and other big banks are very special places. They're fantastic places to work and grow up. But being an entrepreneur has always been, something that's in my DNA, I think, and decided to take the leap and couldn't have been happier that I have.
So as a younger banker, you're typically focused on just a lot of deal execution and don't have much time for building relationships with clients, which is typically done at the director, managing director level. It seems to me that you were doing a lot of deals and doing a lot of execution, but somehow you found the time to build relationships with clients as well. How did you balance doing execution work with building relationships?
Yeah. I think any person entering investment banking needs to spend the first, I'll say 2, but it's probably closer to 3 years being the quarterback of execution and really mastering that skill set. Because once you get to a certain level, oftentimes, jaded junior bankers will accuse senior bankers of not knowing what they're doing. But at the end of the day, every good senior banker has mastered execution many times over. And that's sort of table stakes to build upon further in this career. So I think it's super important. And starting at a boutique, actually, from my perspective, actually offered a optimal place to start. I worked on a team of, I think it was 5 of us, and I had a direct sort of open door to the partner that I was working for at the time. And just through those conversations, sure, I was running the execution on deals, but even a few situations, it was just him and I working on an M&A deal. And I think that was a really interesting perspective to gain, especially directly out of undergrad, and helped sort of start to build the framework or form the framework of mastering the execution, but also understanding and appreciating and being able to navigate the bigger picture. In terms of balancing the two, especially when you become like a mid-level or senior level associate, I think you're expected to be a little bit more commercial in nature and understand, the different dynamics at play. And I don't know if it was necessarily ever a struggle for me balancing it. I always viewed it as one and the same, especially when I started picking up coverage on my own clients. I felt like I was sort of, the ones creating the decks and updating the comps and, pulling relevant precedents, what have you. But was then also tasked with packaging that information into a digestible format and actually getting on the phone with the client and leading that dialogue, which I think is a fairly natural progression. And quite frankly, if you're the one doing a lot of the execution, the numbers and the situation and the materials better than anybody else. So I actually think they kind of go hand in hand with being equipped to get in front of clients and speak confidently about a situation.
So a one-person investment bank kind of sounds like an impossible idea given how many back office functions there are. I know you have a partnership with GT Securities, which does a lot of your back office support. Tell me the story of how this partnership came about and how they're helping you right now.
Yeah, so there's a number of platforms out there that support folks seeking to do similar things to what I'm building. And I had for a while been thinking about making this move. So I kind of went around and met all of the different potential broker dealer partners that could provide this type of support, and ultimately felt most comfortable with GT. I think it was one, a great cultural fit. Two, I mean, they're one of the most experienced in the space. I've been doing it for over 20 years. And three, they offer other ancillary benefits as well. I mean, if you work at a big bank or one of the elite boutiques, sort of, you'll take for granted the Cap IQ and FactSet and PitchBook software. But as a startup, those software expenses can be prohibitively expensive for some. So they offer sort of a suite of some of that software included in our partnership, which sounds like a small thing, but it's actually material. And as we thought about sort of the three options of standing up a broker dealer, because the only way to do this business well is to actually do it through a broker dealer wrapper. There are certainly folks that attempt to do it without, but it's important to do things sort of in the lines. And the three sort of options that I drew up is I could start my own broker dealer, I can acquire a shell broker dealer, or three, I could partner. And this third option was the path of least resistance. The sort of onboarding and setup time was fairly minimal. It enables me to start building right away and prove the concept out in the market, and not wait in the first option 12 to 18 months to start my own broker dealer, or acquire a BD, which you can probably do quicker, but you still have to staff that, which there's a cost associated with that. So running sort of the break-even math on the economics of this partnership that I have versus doing it in-house, there will naturally be a point where we outgrow it. But at the beginning, the bar is very high to make this, I guess, or to make the other options more interesting.
So I was one of the lucky few that received the Edgar Matthews Co. Friends and Family Round pitch deck, and I must say I was very impressed. Clearly, you have identified a wide space of opportunity in the middle market. But as you said, there are also a lot of investment banks out there, especially in the middle market space. How does Edgar Matthews Co. plan to differentiate itself from other banks?
Right. So I think it's a few things, and I believe there's a pretty graphic I put together, sort of specifically defining that white space, if you remember that. But I think it's a couple of things. I mean, to your point, and I'll reiterate what I said before. Starting an investment bank is not a novel concept, but we think we're differentiated really on a couple of ways. I think first and foremost, just the suite of capabilities that we bring, given our broker dealer partnership, being able to compete and provide execution and advisory in relation to really any flavor of capital markets transaction, I think is differentiated versus a lot of firms of similar scale or size to us, which is why when you look at a lot of the product sets of the independent firms, it's mostly in M&A and non-financing related areas of banking, which is certainly a focus of what we do, but we think the financing part of the equation does differentiate us quite a bit. I think, second off, it's our, I don't want to say pedigree, but our experience. Having the perspective of working at a bulge bracket is very differentiated in the middle market. I mean, even being in business for the past 4 weeks, I'm finding it fairly easy to get on the phone with new clients once they sort of understand the background of our team, which not everybody can point to that. And that takes, years of experience and being at the right place at the right time. So being able to lean in there has reduced the diluted reputation that a lot of new firms might have in the market when they're starting to prove themselves out, which is, something I'm hugely grateful for. And going back to why I felt comfortable starting this, a big part of that. And in terms of, why we are interested in the mid-market, obviously right now there's a lot of uncertainty and macro headwinds, and people are saying M&A is on track to have a terrible year. But I mean, those anecdotes are somewhat valid, but I think overblown. I mean, M&A is certainly down, but what you have to frame that in is we're coming off of a complete record-breaking year of 2021 and the beginning of sort of 2022, right? And I think large cap M&A is certainly challenged, but it's actually interesting. We've run a bunch of data on this, and when you look at deal trends in the middle market, over the past 20 years, the middle market M&A space is 20 times busier on a volume basis, number of transactions done per year, versus the large cap space. So there's a lot more going on. And in times of stress, I think large cap M&A going back to sort of 2008 as a proxy, was down 50 or 60%. And middle market M&A in times of stress certainly does go down, but it's closer to 15 to 20%. So it's busier and more resilient.
And what is the reason for that?
I just think there's different dynamics at play for smaller company mergers, acquisitions, divestitures, right? I mean, large cap M&A is sort of at the mercy of, well, one, it, largely includes publicly traded entities. So you're directly influenced by the power of your currency, how your stock is trading, right? And also the debt financing markets. If you're a investment grade rated company and from 2008 to 2021, when interest rates were zero, you could borrow money at 2-3%. Now things are becoming more normalized, and your cost of debt capital is now closer to 7 or 8%. That puts a pretty significant strain on your appetite for M&A, right? So I think that has certainly influenced dynamics. There's more of a factor of, I think, CEO confidence and folks sort of sitting on the sideline waiting for something to normalize is another piece of that. But the mid-market M&A space, these businesses are sort of used to borrowing at higher costs of capital, and that financing portion is a smaller piece of the ultimate puzzle of what actually drives M&A in the mid-market, which is why I think you see a lot more resilience. So, I mean, right now, as we're, working and actively pitching for situations, I'd say transactions are seemingly taking a bit longer to close and are becoming more structured with earnouts and seller paper and other ways to sort of bridge valuation gaps. But at the end of the day, it's still very active, and it sort of proves out the thesis of why we started Edgar Matthews.
So you recently hired your first employee. Congratulations. Tell us about your plans to scale over the next 1 year and then over the next 10 years.
Yeah, so I think first and foremost, it's putting some tombstones up and proving that we can get deals done outside the realm of our previous shops. So in the next 12 months, I mean, we sort of have a goal of, closing 5 deals, which I think we'd be super happy with. And we look at, our pipeline and number of engagement letters we sort of have signed now, we think that's very doable. You kind of were getting to it with mentioning the hiring of employees. That's the biggest, I'd say, strategic focus of mine outside of the day-to-day deal part of the job. This business doesn't work without hiring world-class people. And we think we've structured, compensation and incentives in such a way that our platform will be interesting for a lot of people. So I think, 12 to 18 months from now, I'll elongate your timeline a bit. I would love to have 2 to 3 sector teams being built out, at least with the senior person identified, and building a junior team and support team sort of around that. As I mentioned, I mean, I've been mostly focused on FIG, and that will continue to be a core area of focus of mine. But the goal over time is to bring the sector coverage model, which is, characteristic of a bigger bank, but bringing that to our platform as well, because I think there's a lot of synergies associated with that. And look, I mean, 10 years from now, I think it's much of the same. It's growing to a certain scale, going into new geographies, going into products, and truly having an expertise in all of those areas. And I think the biggest goal of mine, and what kind of gets me out of bed in the morning, is building a extremely respected and reputable brand in middle market investment banking. And what I mean by that is when we take on a client and we're selling the business, raising debt financing for them, raising equity financing for them, we want to have the reputation that when we call up a strategic buyer or a private equity firm or a potential debt investor, that the buy side kind of thinks, okay, Edgar Matthews has done their homework. The fact that they're taking this client on shows that it's a quality business, so we're going to give it a hard look. And that is a reputation that is built over time, but I think that is what we're really striving for, and keeping that in mind even at day one.
So you're 28 years old, probably one of the youngest CEOs on Wall Street. Have you faced any instances where maybe someone has looked down on you because of how young you are? And how did you react and respond to these negative people?
Stay away from those types of people. But look, on a serious note, I mean, it's a fair question, but I have to say, in all honesty, the number of interactions or situations I've been in that were negative because of my age have been extremely minimal to almost non-existent. And it's a fair question because it was something I was self-conscious about, especially when I was a mid-level to senior level associate trying to get in front of companies and CEOs. Certainly the, brand of my prior shop helped me, but I was definitely sometimes self-conscious when I'd be on the other side of a, group of, folks much older than me. But you quickly get over that. And what I've found is as soon as you can prove that you know what you're talking about, you have real domain expertise in what you're talking about, and you have conviction in your ability to execute with the client, I think is important. And perhaps even the most important thing is also being very upfront with what you don't know and what you cannot do, right? Nothing will anger a client more than the, famous proverb of, over promising and under delivering. So I think just being transparent actually improves your credibility. And in summary, just being confident in your knowledge and your abilities.
I want to talk about the Bloomberg article. So for all the listeners out there, there was a Bloomberg article published when Edgar Matthews Co launched. Okay, so the article comes out and you go from Matthew Edgar, who's known by some friends and family, to Edgar Matthews Co, who's suddenly the talk of the town. Tell our listeners what was the most positive reaction and the most negative reaction.
Yeah, I mean, I can't point, I guess, to a super positive or super negative reaction to it, but I'll give you some anecdotes, I guess, of my experience. So on the positive side, well, taking a step back, I was actually taken aback by how fast that spread. I think on that day, I mean, you can sort of see how many people view your LinkedIn profile in a day. And I'm used to, one, two, maybe three people viewing it per week. It went to 7,000 people in one day. So it was definitely overwhelming from that perspective. But look, I had spoken with Bloomberg in an interview. I had known the article was taking out. I worked with my PR agency to, put that together. So it was all to be expected, but the fact that it was, put through every Bloomberg terminal in the world, made it spread like wildfire, quite frankly, which was a good thing. I mean, it's always nice to have people know what you're doing and, have someone actually position the firm in the right light. So I was happy with it overall. But in terms of the outreach we got, I'd say 50 to 55% of it was actually commercially helpful. And what I mean by that was different investors or potential clients or sponsors that I may not have previously interacted with on the back of that reached out to me. So there was probably between, 35 and 50 new relationships that were sort of built from that, which was great. No specific negative, negative repercussions came from it. But what I will say was it was astounding how many vultures came out of the woodwork trying to attach to this story. And what I mean by that, there was private wealth advisors, there was IT providers, there was, commercial real estate brokers trying to help with office space, which is all great and fine. I understand the business. I'm in a service provider role as well, but the sheer volume of that was overwhelming, coupled with kind of folks from all walks of my life sort of reaching out and congratulating me. So it was a bit of a distracting first day. I felt like I wanted to get in the seat and start calling clients and start putting together some deals, but it was an enjoyable experience net.
So investment bankers love to talk about how many hours they're working, unfortunately, all the time. So are you working less or more since you started your own firm?
I mean, the obvious answer is more. I stopped tracking how many hours I work a long time ago, but I mean, look, investment banking is a strenuous job. People know that when they're walking in. I think it's gotten a lot better over the past couple of years, to be honest with you, but it's still a strenuous job. And once you add the founder and business owner responsibilities on top of that, it's certainly a 24/7 type of job. Over the years, I do like to pride myself on being efficient and focusing on things that really matter. But look, it's certainly not for the faint of the heart. And, after doing a, 12 or 14-hour day, speaking with clients, structuring deals and trying to get things done, having to set up payroll and negotiate office space and deal with business insurance certainly adds up, but it's all part of the process. And I think having the lens of a founder now is going to help me become a better banker. I mean, I'm a super green founder. I've only been in business for 4 weeks now, but I do think having that perspective long term, it might seem mundane in the short term, but I do think it provides a very unique perspective and will help me with my clients.
And how are the stress levels? I know when you're in banking, a lot of your schedule depends on someone else. But when you're working for yourself, it seems that you're more in charge of your own destiny. So how's the stress been for you? Is it better or worse?
Less in the sense that you always know where things are from a process perspective and can easily anticipate what is going to be expected from you over the next, 24 to 48 hours in any situation. Whereas the classic story in banking is and this never happened to me sort of post analyst years, but working super hard all week and, you know, your your senior or your manager saying, "Oh, hey, by the way, we have this bake off on Monday. It's Friday afternoon." That can all be remedied with proper communication. But again, that sort of risk is eliminated to your point when you're kind of working for yourself. And like I said, at my previous role, I mean, I felt like I had a lot of my own control over my life and was driving my own processes. So I've been sort of used to that. But I think in some ways the stress is greater, right? Because everyone says, the wins feel a lot better, the losses hurt a lot worse. And I think that's right. I mean, thankfully, so far things have been going quite well, and we've been having a lot of small wins to celebrate. But not everything is always perfect, and when things do start to go a little bit off course, you certainly feel that. So that does amplify the stress levels a bit. So it really depends day to day. I know that's not a great answer, but how I've been experiencing it thus far.
You talked a bit about a mentor you had while you were at Goldman that really helped you. I want to hear more about just how that relationship was and how it helped you. And then tell me about what are some of the other people and some of the other things that have had the most influence on your career.
Yeah, so I'll address the latter part first. I think just having the experience of working, well, I guess having the experience of working at both a boutique and a bulge bracket has been super valuable, especially as I think about setting up my own firm, right? Being able to kind of bring the best pieces of both of those models into what I'm doing now has been super influential. And, if you see on the website and in the press release, something we've said over and over is the DNA of a big bank with the intimacy of a boutique, and being able to, again, draw on experiences from my years at sort of both of those has been super helpful. And I guess from a mentor perspective, I mean, certainly the most influential person in my career to date was my boss at Goldman. I essentially worked for the same person my entire duration there. And we were able to rise up within the firm together and really build a business from the ground up. When I was joining GS, you probably read in some press releases that they were forming the Cross Markets Group, which was their play on sort of middle market coverage. And we were part of that mandate and really focused on building relationships that were at that time new to the firm. So I've seen everything from, building target lists and figuring out which clients to call on and what types of products or services we were going to try to pitch to them, and seeing that evolve into building a fairly steady business and also hiring people around that gave me a lot of insight into the challenges in setting up a new financial services firm. Now, the obvious difference is having one of the world's largest investment banks and that infrastructure behind you to do it. But the motions that we were going through were very similar of what I was doing in the early days of this firm. So I think that was extremely unique and not something that everybody is lucky enough to experience.
And how would you compare working at a boutique investment bank to a bulge bracket?
So it's different. I think starting my career at a boutique was the right move for me. And I think that's just because it enabled me to be very hands-on. There's nowhere to hide at a boutique, right? Especially, working on a team of 5 or 6 people, like I kind of mentioned before, and being thrown into the ring and it's you and a partner executing a deal. That was super exciting to me. And the best way I learn is not only by doing, but also being under pressure helps me learn better, quite frankly. So I think that was valuable for me, but the sheer capabilities and infrastructure of a big bank is worth experiencing at some point in your career if you intend to stay in investment banking over the long term. Just because at a boutique, I mean, look, Centerview, Evercore, Houlihan is a little bit of a different story, but those firms are such fantastic firms, and you're going to be working on multi-billion-dollar industry shifting M&A deals at those places. But I think it was important to me to really build out the product and financing expertise, and I certainly got that at a bulge bracket. So that was definitely one of the core differences. Plus, at a bulge bracket, I mean, most of the shops out there today have a lot of synergies between an asset management unit, a sales unit, a trading unit, and I think understanding how the entire ecosystem sort of interacts with one another is, very interesting and I think important to understand.
I know you're a really hardworking, charismatic person, but I want to ask you, what are personal qualities that you have, in your opinion, that have led you to this point or have been most critical to your success today?
Why don't I answer you to answer that for me? I'm just kidding. People have told me that
I can also answer that, by the way, but I want to hear your answer first.
People have told me that I'm a very scrappy and relentless person, and I tend to agree with that. I like to think I am able to do it in a smart and respectful way, because there's a fine line in being super hungry and ambitious and lacking focus. So I think combining those two is something that I'm still developing and have learned over time. But I think that's super important for anybody in this business. And also, I mean, something, again, I'm still developing on a day-to-day basis, but having a high EQ and understanding how to deal with different personalities and different process dynamics and different situations, I think is definitely important. Something I like to think I have a good pulse on, but certainly there are situations where I misplay situations, and so it's a work in progress, but something that's very important.
Investment bankers typically are very smart, motivated people, but when they come into investment banking and they start making a ton of money, it's really hard for them to leave. And both you and I know that once you start making those bonuses, it is really hard to quit your job. So I want to ask you, what advice do you have for investment bankers specifically to take that next step and start their own firm?
I think first and foremost, you need to be honest with yourself and determine what what you're passionate about. And it's going to sound like a crazy answer, but this job is what I'm passionate about. And for a number of different reasons, and being able to couple my entrepreneurial spirit with my startup, my business being investment banking, is the greatest combination. That is certainly not the case for 99.9% of people probably working in finance today. But I think there's a degree of just being honest with yourself, and it needs to be a calculated decision, right? I mean, as I mentioned, I was, the idea was percolating for, 2 to 3 years, right? And I determined the opportune time to make the jump for a number of different reasons. And I got to a point where I just couldn't talk myself out of it anymore. So I think a lot of the mistakes, well, not necessarily the mistakes, but one of the missteps that founders can make is an over eagerness to get started. And look, I mean, people are going to laugh at me saying that, right? I'm 28 years old, starting an investment bank. Like, I could have waited a number of additional years to start it. But I think folks that try to jump too quickly will find a little bit of a tougher time. Whereas it might seem early to others, but I felt very comfortable at the pace in my life and my career that I actually did decide to take the plunge. And so far it is working out. I mean, the hardest part, like I said before, is actually leaving. And to your point, I mean, there does come a point in, working private equity or investment banking, hedge fund, right? You do start to, make a pretty nice living. And that is hard to walk away from. But this was definitely not just a financial trade for me. It's actually just a desire to build a great platform and accomplish sort of the long-term goals I laid out before.
So let's switch gears a little bit. I do want to talk about health. I know you're a big Barry's Bootcamp guy. So tell me, what do you like about Barry's or any other workouts you've done? And would you recommend it to our listeners?
Yeah, so fitness and working out is one of the significant ways that I keep it all together and stay sane in doing the what feels like millions of things I'm doing on a day-to-day basis. Even before I started Edgar Matthews, I mean, banking is not the best lifestyle job. So finding time to decompress and exercise has been really a big part of my life, but it's become a really significant part over the past couple of years. I mean, to address your Barry specific question, um, I love running, so I love the combination that it offers. But the honest answer is I'm just not going to work out that intensely on my own. So I need to pay someone to make sure I do that. So it's it's good in that sense. And also, I mean, look, it offers a good community. It's a great company, so I support what they're doing. But I do think health and fitness is an incredibly important part of doing things well in this job. So it's a big focus of mine.
I want to talk about your relationship. I know this is a bit of a personal question, but I have known you before you met your girlfriend, and now you've been with her for over 4 years. And to me and everyone and all your friends, it seems like she's had a really positive impact on your life. So, what makes your relationship work, and how's it been for you?
Yeah, I mean, first and foremost, I completely agree with you. It has had a profoundly positive impact on my life. I think the most important thing with any relationship, and this applies to business relationships as well, is just having a mutual respect and understanding for each other. So I think that's a huge sort of cornerstone of, how I deal with personal relationships. And look, specifically, I mean, with my girlfriend, when I was putting together the business plan and the blueprint for Edgar Matthews, she was a great sounding board for everything and would give me real feedback and real support, and was part of the reason why, I felt so comfortable making the jump. So I think finding a partner that can offer that level of support is hugely important, and having the sense that you can sort of build something together is special. And I think also, I mean, just having your individual pursuits in life. I mean, my girlfriend is very successful and has a very interesting job that excites her, and being able to support one another in those more professional pursuits, I think is super important. And last but not least, I mean, Haru, you know me well enough. I mean, not taking yourself too seriously and just having fun is also a big part of the equation as well. So as you can sort of couple all of those pieces together, I think you're setting yourself up for success in the personal side of your life.
So, what do you hope your legacy will be for your work, which is Edgar Matthews, and then your personal life, which is Matthew Edgar?
I think on the personal side, it's obvious building a great company and getting to a level of reputation I kind of described before. But there's a quote, and I'm probably going to butcher it, but it's leave every situation, person, or company you come in contact with better off after your interaction. And I think that's something always to strive for. I don't think I have the level of charisma to truly do that, but it's certainly something to aim for.
I would disagree with that. I certainly think you have the level of charisma too. So at the end of these episodes, we do a few rapid fire questions. Are you ready?
Always.
If you could switch lives with anyone for a day, who would it be?
Scooter Braun.
Why?
He interacts with so many amazing artists and really emerging talent. I'm a huge music fan, so I think being surrounded by that day in and day out would be a pretty cool way to spend your life.
I think Taylor Swift would disagree.
Touche.
Favorite book?
I won't say a finance book. Think Like a Monk, Jay Shetty.
Best investment bank?
Edgar Matthews.
I was really hoping you would not say Goldman, so thank you. If you could eat one food for the rest of your life, what would it be?
Sushi.
Best area to live in New York City?
Greenwich Village.
Greenwich or West?
I like Greenwich. West has been a bit overrun lately.
Yeah. I think since the Little Island started, or since it was founded, I guess it's gotten a little bit touristy.
Yeah, it certainly has. I mean, I think the closer you get to the highway, the better, in my view.
Hmm.
But I do like Greenwich Village, and it's just a little bit quieter, tree-lined streets. Can't go wrong.
Matthew, Edgar, this has been really fun. This has been 10 years in the making. And again, I'm really, really proud of you for everything you're doing. Thank you so much for coming on. It's a pleasure having you. And I cannot wait to see all the amazing things you are going to do in the next few years.
I appreciate that. It goes right back at you, and yeah, thanks for having me. This was a lot of fun.